All right, welcome to another episode from the Chart Readers. Man, the heat has made it so hard to do two videos in one day, but here we are. All right, so we're going to cover the weed stocks today. We're going to look at Tilray, SNDL, CGC. You know, there was a request for MSOS. So I'm going to make sure I get MSOS on this one, and then HITI at the end if we have some time. All right, but interesting days here for Tilray. All right, and if you watched the last video, there was a thought that this thing might actually run as high as 195. That's still kind of the thought right now, right? Good little battle with this 20, nice channel between the 20 and the 50. Lo and behold, we're at the 50, right? So let's see what this red line does. I'm not 1,000% sure if we're breaking that 194. But hey, MACD is looking good, RSI is good. We'll talk about all that shortly, obviously, right? SNDL is actually setting up very, very nicely. So this thing has been holding that 100 as we've talked about. We're now at a really good place to seemingly come after that 50 moving average, right? So that's definitely what we're hunting there. ACB has had a good little move. And again, just like SNDL, seems like it's going to want to come up to the 50 moving average. When I look at MSOS has me concerned. It really, really does, right? There were moments where it was trying. There were moments where it's trying. It's now definitely not in a good place. And we'll talk about those details shortly. But yeah, that 755 seems like it was the killer, right? So that'll be that. And then with high tide, man, we've basically made our way all the way down to this line, right? So hopefully this thing holds. We're basically a stone throw away from the 200 moving average. But again, earnings reaction has been the story here, all right? So excited to talk about all that and more in a little bit more detail. But before we do go any further and I give you more of my thoughts, what are we going to do? Same thing we always do, right? We'll take a look at the daily and the weekly to see how these things are setting up short term. We have our 5 moving averages. There are horizontal support and resistance lines that I do draw manually myself. And then when we are done up here, we'll use the MACD, RSI, and volume as our lower indicators. Hey, really quickly, if you can, please subscribe to this channel. Share this video online with your friends. Comment good or bad if you disagree. Look, anything you can do helps so much with these YouTube algorithms. But for real, just being here and giving me your time is super appreciated, all right? So I normally do Tilray and SNDL. I'm gonna throw in ACB on this one, and I kind of flashed it in the beginning, right? But as I look at Tilray, as I look at SNDL, and as I look at ACB, all 3 of them are all about that red line right now, that 50 moving average, all right? And ACB has a real shot at making a nice little move up to basically 609. And SNDL, roughly the same comment, has a real good shot at making a move all the way up there to 215. This one's 50 moving average, right? When I look at Tilray, so Tilray is basically there. And it's a little harder for me to really put a finger on what I think is going to happen next, all right? Look, these 3 lines are very hard lines individually, all right? Obviously, I believe that the 100 is that much harder than the 50. I clearly think that 200 is the hardest and that much harder than both of those respectfully as well, right? Normally, and what did I just cover? I just posted the SoundHound. I was just talking about SoundHound, and there are moments where the spacing between the moving averages is good. Look, believe me, I had no idea what was going to happen in a single candle, but I really thought that we could go from that line to that line, go from that line to that line, and then go from that line to that line. Each 3 had a nice little space between them. It gave us an opportunity to battle each of them individually, and then we can go, right? With Tilray, that was the thought. The thought was between the 20 and the 50, we had a real good channel. We had a real nice ability to go from there. We had a good divergence on the MACD. The RSI was a very healthy number. And hey, volume was decent, right? We've now done that. I can't really say the same for these channels. Those are tight, right? This is from 184 to 189, and then from 189 to 193. That's basically a stone's throw away from each other, and I'm not quite sure if that's gonna, if that's gonna be breakable. I've kind of thought maybe we would make a wick all the way up to that like 195 point. I still kind of think that right now. I think there's a chance that we like maybe hit it, but I'm just not entirely sure that we break it. Now, yesterday was a really weird day. Yesterday was a pretty crazy doji, and I like seeing this candle. It's not the biggest, 4%, it's not the biggest of candles, but that's a big candle after yesterday's doji, right? So, there's a couple interesting things that say good here. I think I'm just going to give these moving averages the respect that I think. Look, we still haven't gotten over the 50 yet, right? When I talk about SNDL and ACB, ACB, wow. I keep saying ABC in my head, knowing ACB is right. I think we can get up there. I'm not exactly sure we're going to break it just yet. Now, don't get me wrong, MACD looks good, RSI looks good, 66 isn't the biggest of numbers, but I think going from there to here is going to take us pretty close to 80 on that RSI, and I'm just not sure, right? When I look at ACB, same thing. I think we're going to get up here. Interestingly enough, that's actually a pretty low RSI, so even if we got there, that would actually still stay pretty low. Interesting, ACB. Interesting. Okay. I don't know what to think on this one. This is one of those where I would love to see what it looks like on the 1 and the 2. I actually didn't look at ACB before. I've just been covering this one regularly. I think the overarching story across all three, I'll just say it here and then we'll show it, is this 50 moving average line on the volume. All right. We have an inability to get over the average volume of the last 50 days. It's been well, that was a good zoom actually. It's been horribly off for a while. It's getting closer and closer, and hey, volume's growing and growing. But yeah, we really need to get over that white line right there. SNDL, exact same story, right? Even tilray, exact same story, right? So if volume can come, maybe that'll be enough to break the moving averages. Because again, I'll say it again, I like the MACD and the RSI. I do. I like our lower indicators. I've just come to learn you got to give the moving averages the respect that they deserve. Like, I've lost more money assuming lines were going to break. You know what I mean? So you don't need to catch the bottom to live better than most. I can promise you that. All right. That's why I talk about confirmation and this and that. But hey, a move from 180 something to 190 something, that's not too bad. It's not quite 10%, but it's a solid 5%, right? But personally, what I would rather do, I would rather wait for that 204 to break and then we make a good move up. I actually think, give me a second, let me zoom out. Yeah, I think we can lower this line even. I think we can lower it to here. Let's see what that looks like. So basically, I'm trying to take the bottom of that guy. That's kind of the bottom of that. It's actually kind of half of that. Looks like it's the top of that. I like that line. 198. Let's even call it $2. Let's call it 201. I don't think it would hurt waiting for 201. And from there, let's make over a 30% move, right? Every 20 cents is 10%. We're going to make a 70-cent move if it fills the whole thing, right? But look at this channel. Red, 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 green, 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 red, 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 green, green. Like, this is a fast, green, 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 red, 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 green. Like, there's a lot of up and down here. I would much rather catch that up than battle all of these. Even with the other ones, hey, personally, I would rather have that 50 moving average break. I would rather see like 120, let's call it, and go all the way up to 245 or even higher, right? ACB, kind of the same comment. Let me break that line and go. ACB, like I said, I think because the RSI is just a little bit lower and because actually it's a little bit closer to the 50-day, this one might have a little bit more of a shot than ACB. But again, I would actually want to see my other indicators, all right? So not too bad a review here. Let me know. Did I look at the weekly on these? Not really. Let's look at the weekly on Tilray. So over the weekly, this doesn't look that bad. There's a decent space there. There's a decent space there. Hey, there's even a decent space right there. But again, this is the weekly chart, right? So this is going to take a few weeks of candles before it does it. And really, I think we're knocking on the door of earnings soon, right? When was earnings last time? It was in April. May, June, July. Yeah, it's probably going to be in that couple weeks that we were just talking about, right? So earnings might be what takes this to 250. I'm not sure we're going to break the two, just technicals alone, all right? Yeah, cool. Let me know your thoughts. Let me know your opinions, even if you disagree. Let's look at CGC. This is going to be a relatively quick one here, all right? CGC does not look good. And I think CGC is also a little bit bothersome that it doesn't look good given the fact that the other ones look good, all right? I think the one chart that comes to mind is SNDL. So if I zoom out, you can see it. SNDL has that 100 moving average like that, and then the 200 moving average underneath it. When I look at CGC, instead of holding that 100 and going up with it like we saw with SNDL, this thing ends up losing it and is now currently riding that 200 moving average and arguably the 8 moving average down, right? That's definitely a little disheartening to say the least, right? From there, look, oh, am I stalling a little bit? Sorry about that. We actually haven't really confirmed that we've lost the 200. Yes, we have physically been over it for a little more than 2 weeks now, right? Or it's physically been under it, excuse me. We've been under that line for a full 2 weeks plus, right? But that's a bad candle. That's not confirmation. None of those three I would call bad candles. None of those three I would call bad candles. We're basically like, we're still kind of holding that line. And hey, maybe there's a little bit of a slingshot that can happen and take us all the way up to 677, excuse me. For me, I really would not touch CGC until we can break 7, let's call it 50. What's this? 730. I think 730. I think I'd like to be at the top of this candle. What's your half? Let's call it 720. I think between 720 and 730, whatever your risk tolerance is, right? But yeah, if we can break that, oh man, we're going to head all the way up to 830 something. And that's a nice little percentage right there, right? So a little bit too much moving average noise down here with CGC. Look, RSI doesn't look horrible, but yeah, I'm not liking the MACD like I was liking with the others. I'm not liking the volume. Not that I was loving the volumes on the other, but yeah, this is a lot uglier than the other ones were too, right? So kind of a quick one on this one, but hey, at least I'll have time for MSOS, which I haven't been giving much attention to. So look, let me know if you disagree, right? I'm just a dude giving opinions. You might have better ones than me. Let me know your thoughts. Otherwise, let's move in to MSOS. So I do apologize. I have not covered this one in a good while. MSOS, I think, has been the most disappointing of them all. I still remember this candle right here. What was this? January, February, March, April, May. That mid-May when it looked like we were finally going to break that 1050 line. I remember talking about that 1050 line, only for that thing to become a very, very, very distant past. And that's just horrible to say the least, all right? The DEA reschedulization has been probably one of the most confusing things. There were moments when it looked like Biden can basically sign a piece of paper and it was officially going to happen. There were moments when the DEA was like, you know, I don't really know. There were moments where like some senators were like, yes, we got to do it. I think yesterday I saw something that said they officially passed something that was going to ban the reschedulization. This thing has been the most noisy, poorly informed, just horrible. And I think that's a real big reason why we've lost a real quick 40%. And I'm just kind of using round numbers going from like 10 something to 6 something, right? Let's call it 30% going from 10 to 7, right? It's, I think, the biggest thing I would blame, and you know, normally I don't blame the news, right? I would normally say, hey, look, you lose all 4 of those moving averages, you're going to come down to the last one down here, right? You start to lose this moving average, and all of a sudden you're going to start to, you know, just, oh no, I got to pause. This thing froze on me. Oh man, sorry about that. Yeah, for no reason at all, my Wi-Fi disconnected. So yeah, I kind of said everything I needed to say about the reschedulization, right? All of a sudden, though, the technicals are starting to come into play, right? We're living under that 8 moving average. When we try to get over the 8 and over the 20, that same 200 that we just rejected throws us right back down under, right? And man, where's the next line? Oh, I'll draw some lines. Right there. Dude, we're basically at that already. I'll put it right there. So I'm basically taking the top of that November candle and the top of that December candle. It seems like we're going to come down to 660. Oof, that's a lot of red, green, red. That's a big line. That's a must-hold line for MSOS, all right? Truth be told, RSI is not even that low. So that's my next line down. I'm not going to talk about that one. But yeah, when you have a 46 RSI and you know that not that long ago your RSI was down to 20, you know, how low is this one? This one's a little bit further back, but that's a 12 about a year and a half ago. It seems like 660 is going to come. I think I got to draw one more line. What's that? What's the half of that? I'll draw that. I think 6 is going to hit here. We'll see what happens after 6. Yeah, it looks like that's the bottom of that little peak right there. Yeah, I don't think 660 is going to hold. I think 6 is probably that stronger line. Man, when I look at TRULEAV, TRUL, TRULEAV, right? This thing's basically lost those 4, doing its best to hold that 200, right? Doing a little bit better than MSOS, right? MSOS wasn't able to hold it, wasn't even able to go horizontal, right? So TRULEAV, I would say, is doing better than MSOS, but I imagine if I look at a CURLF, right? Where's CURLF at? That's rough. That one lost the 200 pretty badly, and it's living below the 8 and the 20, right? When I look at VRNOF holdings, that one lost the 200 a while ago and has never, still hasn't been able to get back up to it. And then when I look at Cresco Labs, again, we just looked at 4 of the top MSOS holdings. Only one of them was still over that 200 purple moving average, right? You gotta believe that the MSOS ETF, that's a mixture of all 4 of those, is gonna have to be under it when only one is over it, right? So MSOS is not looking good, and as you look into them, really TRULEAV is the only bright side in there, and it's not looking that fantastic, really. So let me know your thoughts. Let me know your opinions, even if you disagree. You know, I probably should have put high tide with CGC. That's a little bit of a regret now that I didn't do that. But there's not a lot to talk about here, right? There's literally 2 things to say. Green, 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 red, 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 green, 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 red, red, red. That was the first one. The second one is earnings, 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 earnings. I'm not here to talk about oh my God, my cat's at the door. Goodness. What is happening? Oh my goodness. I hear you. I'm making a video for the people. My goodness, I apologize. Okay. I'm not here to say, does this thing earn it or not? I'm not here to blame manipulation. I'm not here to blame the shorts. I have been saying I really thought that this earnings on June 17th or 14th, whatever the day actually was, I thought it was good earnings. Raj dropped the hammer. He really did. Good earnings per share, good revenue, good operating expenses, good growth in retail, like all that good. I know it. I'm a human. I have eyes. I can read. It's good. Market reaction matters way, way more than our simple human opinions. And I think this is the best chart that should. I say that on big blue chips. You for sure gotta believe I mean that on a stock that's holding 300,000 shares, all right? The one thing I keep wanna just at least emphasize, look, we were living significantly lower in the volume realm. So the fact that even though we're kind of going down, dude, volume's still holding. Volume's still holding about a 400, 500K volume. That's good. Volume is king, all right? I know this isn't the up, up, up that comes with a volume is king comment, but holding and establishing and growing volume is step one. And I know a lot of the people that are watching this high tide section, you're longs, right? I don't think a lot of people flipping high tide, right? So going from trying to hit 100K, trying to hit 100K, trying to hit 100K to 300K is kind of a low day. Oh man, that's great. That's 3x where we were not that long ago, let alone if we can actually hit that 5, maybe even $1 million, right? So volume's doing good. That's a decent thing for the longs. Look, as long as this does not go under the 200 moving average, this thing's still technically bullish, right? You know, I don't like a stock under the 8. I don't like a stock under the 8 and the 20. I don't like that we've lost 4 of the 5 moving averages. That 200 moving average is a strong line, and we easily can propel back up. It has the ability to do that, right? And our RSI is getting a little bit low, so we should bounce on one of those two. I'm using the word should loosely because, hey, the market don't care about should sometimes, right? So let me know your thoughts. Let me know your opinions, even if you disagree. Hey, I appreciate you so much.